Alright, so today is Wednesday. Price comes from an expansion. Yesterday's profile being a classic buy day. Currently, right, so into Wednesday, price gapped up. So far, found a rejection at the highs. Okay, and so we'll see what discounted PD raise there is inside of the previous day's range to be able to gauge order flow, have drawn liquidity, understand how the profile could form. On the daily chart, the nearest daily bullish PD ray is the order block. Now, in here, obviously, there's a potential fair value gap forming, all depending on the close of today. So that can be an option in terms of the weekly profile. Okay, Monday, an order block was a shakeout inside of the range. Divergence at the previous day's low of Friday. Tuesday expands, and now, right, Wednesday could maybe create something like this. If it's very bullish, okay, it could simply create a small wick under the open, okay, respecting the NWAG, and from those levels expand. Okay, this all depends on the time of the day where this happened, right? And also we'll see on the lower time frames currently what is there inside of this wick. So discount array order block, premium array, the wick here. Any divergences with this, right? Any fair value gaps through this. If we look at the current weekly profile, I can see that Monday so far has created a low of week inside a fair value gap located at 25% of the previous week's range. Right, cutting right through 25%, right, and has retraced into it and has broken structure through it, right, creating a series of fair value gap, which will be important for today. Again, say today will be a retracement day or a consolidation day because price comes from an expansion, right? Then we'll see where could price come back inside of the range. Well, obviously there's this fair value gap. We'll look at it on the hourly chart. We'll look at the 3-day look back, but this is a very obvious one because cuts through the mitigation block. Is in the vicinity of a series of order blocks at these levels, right? An old phase of accumulation. Right, there was an immediate rebouncement at these levels, okay, followed by an expansion. Okay, so this current 4-hour fair value gap, right, if price were to come back into it, it's going to be very important, or at least, might say, coming inside of New York, right, seeing how price, if it traded at all inside of here, okay, if we could do this for all that matters, but if it did trade inside of here, how did it react, right? Do we come inside New York and price at something like this, right? Still not trading inside of this fair value gap, but trading below the current fair value gap. This is the gap up that came from the immediate rebalancement. Okay, so if price is really bullish today because price comes from an immediate rebalancement, in my opinion, these levels should be enough to create the low of day. Right, create a small wick under the daily open, respect the range, and here there's a couple PD rays on the hourly chart that we could look at. All right, and from these levels keep trading higher. So if these levels were to get broken, okay, and coming inside New York, right, then here we have two fair value gaps. I like this one better, but could be that price may want to draw to this one, right? Cuts through the order block. Overall, there's a mitigation block. But we'll see on the hourly chart why. Okay, in case of it could be a bearish profile, it could be a bullish reversal profile. Why I like this fair value gap best. Okay, so this range in here is important for order flow. Okay, if price is really bullish, could form low of day at these levels. If not, if today again will be some kind of retracement consolidation day, right, price will likely use this fair value gap, okay, because it has the end dog inside of it, right, the new day opening gap, will likely use it to, in my opinion, there should be price back inside of the range, right, like 50% of the range. Here on the hourly, we could look at the previous day's profile, okay, which was a classic buy, very small wick below the body, price expands and creates a phase of accumulation after the expansion, okay? So price comes from expansion, consolidation, expansion, right? And so far has created a SIBI. Okay, so the order block that resides in here, in my opinion, is important because it was the final phase of accumulation before a new range high, before a new distribution. So also if we look at the range, the previous day's range, we can see this order block comes at in the vicinity of, well, I'm sorry, at 25% of the previous day's range. What I wanted to say was, right, around it there's another order block, there's a lot of wicks, okay, and here price was high resistance. So if price is bullish, right, it could do simply this, we create an order block around these levels, okay, or internally, and trade high from here. Whereas if the level is broken here at these levels, now we start to, right, we come towards 50% of the range, and what we find at 50% of the range is, look, there's two fair value gaps, right, two breakaway fair value gaps. Okay, could be this one, could be this one. Right, maybe price will want to trade below the 9 a.m. open since they don't have much of a wick. Okay, that's in case, again, if this, right in here, what we have, right, if this were to fail at these levels, then you want to see how price trades in, around here, around the vicinity of these fair value gaps at 50% of the previous range. Right, price here cuts through a mitigation block. So if price were to come back down here, even in case you have a classic sell profile today, okay, very likely, say New York expands into these levels, right, the rest of the day can consolidate. Or if New York is at these levels, right, disrespect this fair value gap and goes through here, then we could see some kind of swing to Z profile. Right, something like this. Right, that then sets up the move for Thursday, which if the week is still bullish, right, then we're trading inside of a classic buy. After the high resistance here created inside of the range, right, price could use that to either manipulate or trade from an order block, a breaker, to trade higher. Okay, so possibility of this can be a bearish swing to Z, it could be a bullish New York reversal, it could be a classic sell day also, right, something like this. In terms of, that's in relation to this PD ray, if ever they would get traded to, and if not, there's this one here. Okay, if price simply here revisits the fair value gap, right, it has a volume imbalance, has a new day opening gap through these levels, is backed by an order block, okay, is below the daily open, price trades into it and then rejects, okay, this can be enough to create the low of day. So key PD rate here, okay, it has the order block at 25% of the previous day's range. It's the expansion that comes after a phase of consolidation, okay, so high resistance price action. And below that we have two hourly fair value gaps at these levels, okay, they cut through the range of the mitigation block. They're located at 50% of the previous day's range. Right, they cut through an order block. So a lot of confluence around these levels. Okay, so if price is here and you're still looking for shorts, unless it first spikes up in the range before trading lower, okay, say the drawn liquidity is right this previous day, or even, well, I don't think that price would be this heavy. I think it's a bit unrealistic for the market to drop 3,000 ticks in one day. Right, and so overall I think that's why, even if price is bearish today, it should stop somewhere around here. That's my anticipation. If it's really bullish, then it can trade from this fair value gap.